All right, what's going on, everyone? So today we had the FOMC rate decision come out, and of course, we had some high volatility, high volume coming out. So we're just going to kind of break down kind of what happened a little bit, what was said, mainly in the statement and also in Powell's interview in general, and then what we really expect going forward. All right, so let's go ahead and get into it. All right, so here's the statement. Here's the main points that I got out of the statement today. We obviously had the 75 base point rate hike, which was as expected. We did have some hints at possible slower pace of rate increases. You had take cumulative tightening lags into account. So the hinting at the possible slowing of the rate increases is bullishness, mainly because higher interest rates basically tank the stock market. So you have the committee that came in strongly committed to the returning inflation to the 2% objective. So we didn't have the Federal Reserve pivot this month at all. I didn't expect this just mainly because the labor market is so strong and how staggering high inflation is right now. So we're going to continue going forward. We're going to be very data driven. Mainly what the inflation numbers and labor market numbers come out continuing going into this next cycle really mainly depends on how high the Federal Reserve raises interest rates. All right, so we had a very, very bullish statement come out. So we obviously jumped an instant $6 in SPY, but then Powell came out and pretty much wrecked this altogether. Here's some of the main points that I really wanted to point out. He said will most likely require a restrictive policy stance for some time, obviously because inflation is so broad based. It's not going down. So we did another 75 base point rate hike, and then he said slowing pace of rate hikes will become necessary at some point. This is just a kind of general speech. He said this most of the time. We obviously know that interest rates are going to slow down eventually. It's just a matter of when. He said the time to slow the pace of rate hikes could be as soon as December or February meeting. We will have discussion on that at next meeting, and of course, no decisions made yet because they're going to be completely data driven, depending on what interest rates, depending on what inflation happens, and data that comes out is mainly depending on what the interest rates are going to be. All right, so data suggests we may eventually move to higher levels that we thought at the September meeting. So we had core PCE come out. Yes, it was below forecast. Yes, we were bullish for the day. Still for core PCE, still a new 40-year high. So inflation is absolutely broad-based. It's staggering. It's way too high, and it's going to take a long time to get it down. Now, when it starts to come down, it can come down quickly, but the problem is the Federal Reserve, they're trying to keep their credibility, and they're trying not to back off too quick. So they're going to see this continuing rate hikes, and the main problem is you're so data driven, so they can't really give any kind of forward looking into what they're expecting. Now they can obviously say, like they did in the statement, and say that they expect that the interest rates are going to come down eventually, but that's a given. So it all mainly depends on the data. So here's what we're expecting going forward. So if you look at the chart here, the last 3 FOMC meetings that we've had this rising wedge going straight up, and then we just completely break down and then have a fall for the next 2 to 3 days, or sometimes even longer term. But we're going to continue the data driven. We're going to be bad news is good news going forward, or good news is bad news, vice versa. We're going to be continuing watching for indicators of inflation easing. If it does, you need the labor market to ease, because the labor market, as it eases and you see the unemployment rate going up, the Federal Reserve is going to be basically cutting demand in the entire economy, which is going to draw that inflation down in general. So we do have a gap fill down to 358, so we're watching this in the long term. The daily stock RSI was overbought, and it's starting to kind of come down a little bit. We could start to see this trend down. And then we also have the daily MACD looks like it rejected that complete crossover to the top side. So we could see some long-term bearishness going forward. But remember, November is a historically bullish month. So just keep an eye on that. I want to see if the seasonality kind of continues after all the dust is settled over the as we go along. Here's some of the economic data outlook that we're going with the rest of this week. Tomorrow we have the ISM non-manufacturing PMI. This will most definitely determine the short-term direction for tomorrow. Forecast comes in at 55.5. Last month, previous was 56.7. So remember, bad news is good news. The lower the number, the better it is, if it doesn't include inflation, of course. And then on Friday, we have non-farm payrolls and unemployment rate. You want non-farm payrolls down, and you want unemployment rate up, just basically because you want to see the labor market easing, and you want layoffs at this point, just because you want the Federal Reserve to pivot sooner than later. So let's get into some of the technical analysis real quick. All right, so here let's take a look at a little bit about SPY here. As I stated in the slide a couple minutes ago, we had this rising wedge, kind of traded sideways, and then just completely fell straight down. Same thing for the second time. We kind of reached this peak up here, almost on the resistance of this the daily time frame, just pushing down. So, and then we fell back down straight out of that. Again, the same thing with this. We could see a little bit of a pullback if we don't get a gap down. If we don't see some serious sell pressure here, we could get a little bit of a pullback. But I still see long-term selling, just mainly because this daily stock RSI is starting to come back down, and the daily MACD coming down as well. Now, one big thing we want to point out is DXY, the US dollar, completely crumbled on that first move. But as soon as Powell continued talking about higher interest rates, and the data so far is looking at higher interest rates, we completely saw this run up. Let's see if it can hold this run, or if it can hold it a little bit and keep on pushing. Along with bonds completely, they rocked up pretty good, and then they completely tanked over time. But yields running right now, so just keep an eye on that. We have the stock heat map, very red right now, but yeah, we're just going to keep a close eye on all of this, mainly because we see Apple really broke down below its daily support. We could get some support here on around 138, just mainly catching back on this top of this resistance trend line here. But long term, still here still pretty bearish, just mainly based on the news that we got. If you like this video, don't forget to like and subscribe. Thank you for all the watchers and supporters that we get. We will continue to have a weekly update video. I just wanted to make a weekly video, just mainly because I wanted to kind of state and clear really where the Federal Reserve and everything's heads are at. So everybody just have a good rest of your week, and I'll see you this weekend.